Hello and welcome. My name is Jason Ramos for daytradingfearless.com, and this is part 2 of the daily trade zone levels. So on the first part, we went over how to trade the resistant and support levels and to look at the daily chart. Now we're going to go over how to trade the gaps, naked VPOCs, also known as VPOCs, and the Fibonacci pattern targets. So as we go back to our charts, okay, you'll see these yellow lines, okay, for gaps and VPOCs, okay. What these lines are for they're going to tell you where the VPOCs are and also gaps. A gap would be for regular trading hours versus extended trading hours. Okay, so it's as you could see, on the extended is a 24-hour versus a non-24-hour for the regular trading. So let's take a look at the regular trading hours zones, okay? And you could see the gap. We gapped here, we gapped here. Well, as price gapped above this and never even touched this during regular trading hours, it's still technically an open gap, okay? The other thing that we get are, let me pull up this chart, and this chart is going to give us our virgin points of control, right? They are where the most volume traded, okay, in a single day during regular trading hours. That's from regular stock market open. If you're Eastern time, that's from 9:30 a.m. until 4:15 Eastern time, okay? And what these are going to do is they're going to act as support and resistance levels until they've been touched during a regular trading hour. Okay, so if you kind of look here, we had what's called a naked VPOC right here. Okay, because price the next day, this volume right here, price never came down. So if I just drew a line right here, prices never touched it. Well, what happens 3 days later? Price comes down, we touch it literally to the tick. Okay, we actually broke through it by 2 ticks, and then we had a nice rally of about 4 or 5 points. Okay, so right here we have an open VPOC currently at 2091. So as price comes up, we never touched it. This was the most volume traded on Thursday. On Friday, we never touched it, so it's still open. So on Monday, if price rallies, we're going to look to short. Now, the way I trade VPOCs and gaps is usually the very first touch. I'll look for 1 point. I'm not trying to get 2, 3, 10 points, anything like that. All I want is my one quick point, because I know that algorithms know where these levels are, and they're going to go in and just buy, and all I'm looking for is maybe put an order in 1 tick before. So we'll put an order in at 2090.75, and we're looking for a 1 point scalp, and maybe we'll give it a 1 to 2 point stop loss. I understand the risk reward might not be a 1-to-1, okay, but again, it's a very high probability trade that probably works about 90% of the time. So I don't mind maybe taking a 2 point stop loss on one time out of every 9 times, because the other 10 times, because the other 9 times are all winners. Okay, it's a trade that's just so mechanically worked inside the markets with the algos. Same thing with the gap, right? We have all these gaps. The very first touch, I'll look to be a buyer. We have a VPOC at 62.75. Maybe I'll put my order in at 63. I'll try and front run it, because there are times where it'll come a tick before, or it'll touch it exactly, or go 1 or 2 ticks through it and then reverse, and just you get that natural cycle of buying. So I hope that kind of helps with the gaps and the VPOCs. Now, once they've been touched, it's done. It comes off the chart and it'll actually come off these levels at the end of the day. Okay. Now, in the morning, okay, remember these are done at the end of the day. So overnight, these numbers might actually get hit. You'll be amazed when markets get volatile. Okay. And if we just start falling through this on Saturday or Sunday, or sorry, on a Sunday night, Monday, because of news or volatility in the market, you'll see how well these things work overnight too. So these are kind of like my secret weapons. When there's really no trade on the zones, there might be a trade over here. And then finally, let's go back here to our Fibonacci patterns, targets, okay? What these are they're bigger targets. And let's get rid of all these zones real quick, okay? As you can see, we have a head and shoulders pattern up here, right? You could say shoulder, head, shoulder, right? Well, what I like to do is I like to be able to spot these, but I actually don't play them, if that makes sense, right? I don't play the patterns themselves. What I do is I play the targets of the patterns. And what I mean by that is if we look, right here we have the head and shoulders, here's our neckline, right? Just take a Fibonacci from 100 to 50, swing it back down, okay? And this is where the bigger target is, 2064, 50, 2064, 75, if you get the numbers all lined up exactly, okay? As price falls, I know the buyers are more than likely going to step in, and we also have a gap, right? The high of the gap right here, the gap, and then the low of that, okay, but the high of this gap right here. So things are lining up for that, and I'm gonna look to actually enter for a nice long bounce, okay? Again, maybe it's 1, 2, 3, 4, 5, 10 points, who knows? I just read the market as it gives it to me in real time, okay? But these patterns work all the time, and you'll see it. I'll give you an example. Right here, we have a shoulder, a head, and another shoulder, right? Here's our neckline. Take Fibonacci, draw the 50% line right to it. Price goes and look at what happened. It goes right to it, and then it pulls back. I think it breached it by 1, maybe 2 points, and then it reversed, and you could have gotten your 1 point, maybe even up to 10 points, okay, on this. You'll see these happen all day long. Here's a W pattern, right? W stands for winner, and then it's all it is a double bottom, just like you might have a double top. If I flip this chart over, that would be a double top. M stands for meltdown. Those are my analogies, right? But if we draw to the middle of the W, right? 50%, the other 100% move of it, and look at price right to it, and then we pull back. So these are targets. These Fibonacci targets that I put up there are for longer or bigger terms, okay? Type of trades. They're not so much intraday. These are like, okay, hey, we on a daily or maybe a 15-minute, 20-day chart, I see these patterns. Okay, these are big, significant patterns, and what we're going to do is these are going to be targets over the next couple days to weeks. So that's it for the daily trade tutorial for the zones. And if you have any questions, shoot me an email, jason@daytradingfearless.com. If you're not a member, hopefully you'll come subscribe with us. We'd love to have you as a member. I think these zones are very valuable, and pretty much you're looking at 1 point. Okay, 1 e-mini contract, $50 to pay for your zones, okay, for the entire month to get all this information. Think of it as I do all the homework for you, and I give you all the trading levels, and all you need to do is click the mouse and put the order in and reap the profits. Okay. Again, you can cancel anytime if you're not happy, but I know you will be happy. And remember, just come to our website daily or Day Trading Fearless every day to get these zones after the market's closed. Have a good day. Thank you.